Hey everyone, welcome back to Corporate Decoder, where we peel back the layers of corporate filings. And today, get ready because AUDDIA Inc. might have just hit the gas pedal on their leadership and share plans, and we're diving deep into what it all means. AUDDIA Inc. recently had their big shareholder meeting on September 8th, and it seems like they've been busy making some pretty significant moves. Think of it like a company checking in with its owners to get approvals for important stuff, and boy did they get a lot of things approved. One of the biggest things that happened is they got the go-ahead to boost the number of shares available in their employee stock option plan. This means they can now give out 50,000 more shares to their employees as a way to reward them and keep them on board. They're going from being able to issue about 87,000 shares to over 13,700 shares to over 37,000 shares to over 13,700 shares to over 113,700 shares to over 13,700 shares. This is a pretty standard move for companies looking to grow and attract talent, giving employees a stake in the company's success. Now, remember how I mentioned that September 8th meeting was important? Well, they also voted on who will be on the board of directors. It looks like they re-elected 4 directors. And interestingly, Jeffrey Thraman was among them. This is important because Thraman also recently took on a bigger role within the company. Speaking of leadership changes, on September 11th, the company officially signed an employment agreement with Jeffrey Thraman. This is a big deal because it solidifies his role and outlines his compensation. Remember, Thraman is already the executive chairman, pulling in a salary of $351,300 for that role, but the plot thickens. Earlier in July, the previous CEO retired, opening up that top spot. And guess who stepped in as the interim CEO? You guessed it, Jeffrey Thraman. He was juggling both the executive chairman and the CEO roles. Now, with this new employment agreement, Thraman's compensation for handling both the CEO and executive chairman duties is set at a base salary of $55,000. That's a significant jump from his previous salary, and it reflects the increased responsibility. On top of that, he's eligible for an annual bonus of up to 50% of his base salary. So in the best case scenario, he could be making over $980,000 a year. This signals the company's confidence in his leadership and their willingness to incentivize him heavily. The agreement also includes provisions for what happens if Thraman is let go without a good reason, or if he decides to leave due to certain company actions. In such cases, he would receive 9 months of his base salary, continued health insurance for 9 months, and any bonus he's earned but hasn't been paid yet. It's basically a form of severance pay, which is pretty standard in executive contracts to provide security. And like most executive agreements, it also has those clauses about not competing with the company or poaching employees for a year after he leaves. These are there to protect the company's interests. Another important vote at the meeting was approving Haney & Company as their independent accounting firm. This is a crucial step for any public company to ensure their financial statements are audited by an external party, adding credibility to their numbers. And it looks like the shareholders voted in favor of this. They also got approval for issuing shares related to their equity line and for their Series C convertible preferred stock along with warrants. These proposals are really about how the company plans to fund its operations and growth. Equity lines and convertible preferred stock are common ways for companies to raise money by selling stock or securities that can be converted into stock. The fact that these were approved suggests that the shareholders are on board with the company's strategy for accessing capital, crucial for any growth phase. Now let's talk about something that could really change the game for AUDDIA Inc. Back on August 5th, they announced they entered into a non-binding agreement, kind of like a handshake deal, to combine with Thraman Holdings LLC. This is significant because it hints at a potential merger or acquisition where AUDDIA would become a public holding company under a new name and ticker symbol. The idea is for AUDDIA to sort of be the parent company for both AUDDIA's current businesses and Thraman Holdings businesses. It's a restructuring that could lead to a different identity for the company in the market. They initially had a 30-day period to negotiate a final agreement, which would have ended around September 3rd, but they decided to extend this exclusive negotiation period by another 45 days. Pushing the deadline to October 18th. This extension shows they are serious about this potential big move and need more time to hammer out the details. But of course, like any good corporate filing, they've included the interactive data file. This is basically a digital document that makes it easier for people to access and analyze the company's financial information. People who really want to dig into the numbers can use this to get all the nitty-gritty details. So what's my take on all this? AUDDIA Inc. seems to be in a phase of solidifying its leadership and planning for significant strategic realignments. The increased equity for employees suggests a focus on retention and motivation, which is a good sign for internal and motivation, which is a good sign for internal stability, the re-election of directors, including Frahman, signal shareholder confidence in the current direction. The potential business combination with Frahman Holdings is the most intriguing part. If this goes through, it could mean a substantial shift in the company's structure and market presence, potentially offering new growth avenues. The extension of the exclusivity period indicates a thorough, albeit perhaps complex, negotiation process is underway. They're being careful, which is often wise for such big decisions. However, there are always risks. Mergers and acquisitions are notoriously complex, and success is never guaranteed. The company's financials themselves aren't detailed in this particular filing, so we can't assess their current financial health or how this potential combination would impact it. We'd need to look at their financial statements for that, but based on the actions here, it seems they're looking to consolidate power and resources, possibly to achieve greater scale and market impact. The big question remains how this combination will actually pan out and what its eventual impact will be on shareholder value. Alright, that's our breakdown of AUDDIA Inc.'s latest filing. What's your take on these leadership changes and the potential merger? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.